Welcome on board Vishal Manchanda, Senior VP at Institutional Research at Systematix Group. And Vishal, thanks so much for joining us and good morning. Help us make sense, first of all, of what we can expect from Q4 results when it comes to the pharma companies. Do you believe the growth will be volume or price driven, and what's the outlook?
Good morning. So I think the Q4 will broadly be in line with what we have seen in the previous 3 quarters. The domestic growth on a YOY basis will be in the high single-digit range, with select companies outperforming. From a US perspective, I think it will be selectively strong for a few companies like Zydus and Sun Pharma. Specifically on a quarter-over-quarter basis, Zydus should report very strong growth on a quarter-over-quarter basis. Probably they'll report the strongest US revenues when compared to peers. So I think, but all of this, what the challenge for the sector is, all of this growth that we are seeing in the US is tactical. So it's not going to stick, and probably we'll see challenges in the next few quarters on the growth side.
All right. Hi, Vishal. Good morning. This is Shrishti also joining in. But what will lead to this particular growth? Will that be a volume-led or a price-led growth in this particular quarter? And how much will be the impact of the new launches in this particular growth?
So largely the US growth is going to be led by these high-value launches that specific companies have in their portfolio. So that's driving the US growth, but these high-value launches are not something that's going to stick in the base. They'll probably come off in the next 2 or 3 quarters. So that's the challenge. And I think from an India perspective, the growth has always been a mix of volume, price increase, and new product introduction. So volume so far, if I look at the India pharma growth, the volume has been in the low single-digit range. While the rest of the growth, so out of the high single-digit growth, the rest will come from price increase and new product introduction.
Let's talk about the US part of the pharma earnings, because a lot of these companies are external facing and have broad exposure to the US as well. What kind of earnings impact are you expecting from the US markets? What kinds of sales are you expecting for the companies that have their manufacturing as well as distribution over there? And how much price erosion, if at all, are you expecting from the US markets this year?
So price erosion is something that's always been happening, and it continues to happen. It's in the mid to high single-digit range, and largely depends on the portfolio that companies have, specific portfolios that they have in the US. But it's going to be in the mid to high single-digit range, and it will sustain. From a tariff perspective, we are yet to see the tariffs, but I think Indian companies do not have the bandwidth or the P&L to kind of absorb the tariffs and reduce their prices to the extent of tariffs. So probably what Indian companies will need to do is pass on the tariffs to the US consumer. So I think this will be inflationary for the US customers if at all tariffs come. Probably since the US is taking a longer time to put tariffs on pharma, they are actually evaluating a kind of different option. Is the traditional tariff option. So probably they might also come out with specific segments in pharma that they might want to put tariff in, and specific segments in pharma they might want to exempt. They might also look at a differential tariff, India versus China. So all of these things are possibilities. We'll have to wait and see. But I think as of now, it's better to stay away from pharma for pharma companies that are heavy on generics in the US.
Right, but Vishal, sticking with the tariff, does there stands a case within the pharma segment which can actually benefit from the China plus one theme? Because till Q3, what we were getting to hear is that all of these CDMO companies were rather getting a lot of inquiries for some of the Indian manufacturers. So help us understand that how are you analyzing the situation? As of now, when you say that one should stay away from the companies having a lot of generic exposure in the US, but other than that, which segments to look out for?
So, largely, I would fundamentally I would prefer companies with a lower US exposure. You can't actually, if you want to invest in a large cap, the US exposure is part and parcel to it. But I will prefer companies like Sun Pharma, which has got a US exposure but a lower US exposure, 30% of sales to US. And again, within that 30%, large part of it is specialty and less of it is generics. So generics is where the risk is. The specialty is probably at less risk versus the generics. So I think so specific names, Sun, and then probably the next name I would look at is Cipla in the large cap category, which again has a 30% exposure to US, while the other peers, the large cap peers have exposure between 40 to 50% of their sales to the US. So coming to the themes that can benefit from China Plus One, I think CDMO is clearly the theme that is benefiting from China Plus One. Companies are talking about higher requests for proposals, and this commentary is consistent since the last few quarters, and we also are seeing numbers being delivered by CDMO companies. So that's a segment to look out for. But we need to pick stocks that are at attractive valuations.
Okay, and also want to get your sense on a couple of other stocks, the likes of Zydus and Lupin, right? They've been in the news flow recently. They've lost the mid-metric patent case in the US court. What will be the impact on this? Because what we understand, Lupin has said that the district court's decision does not enjoin them from continuing sales of this Mirabegron tablets in the US. So what could be the potential impact on both of these companies, Zydus as well as Lupin, on the back of this court order?
Yeah, so I think the district court has kind of says that the biometric patents are valid, and hence logically Lupin and Zydus will need to withdraw from the market. But they have a choice to continue. But if they continue to sell the product in the US market, it will be an at risk. It will be considered at risk, and they would be liable to penalties. And these penalties can be kind of 3x of sales on the upper end. So it's a bit risky to continue. I think companies are better positioned to decide on whether they want to continue with the sales or not.
Okay, Vishal, on that note, we'll let you go. Thanks once again for joining us with your outlook on pharma earnings as well as stock-specific updates as well.